Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far, 6 chapters I have completed. This is the last and final chapter, chapter number 7 in unit 1. So in this chapter 7, I'm going to explain you about accounting standards. The introduction to accounting standard, why it is necessary, what is the meaning of accounting standard. Then what are the objectives of accounting standard, advantages and limitations of accounting standard. These are the topics I'm going to explain you in this video, so watch the video till the end. Because very frequently in CA foundation examination, they will frequently ask the meaning, objective, advantage, limitations of accounting standard. So before going further, take the screenshot of the points which I have written on the board, then I'll explain all the points. Now, first of all, introduction to accounting standard. We know accounting is the language of business. A business will communicate with the outside world with the help of accounting by providing financial statements. The financial statements will be used by different stakeholders to take the decisions. That means the financial statements are used for taking the decisions. So these financial statements should contain the true and fair information about the business. So accounting is the language through which the business will communicate and enterprise will communicate with the outside world. Now, if financial accounting process is not properly regulated, there's a possibility that financial statement may be misleading. So somebody should be there to regulate how to make the accounting, how to conduct the financial accounting. So there should be some regulatory body to regulate the accounting so that the financial statements should contain the true information, because so many parties will take the decision. It should not be misleading. Now, to ensure transparency. So why these accounting standards are made? To ensure transparency, consistency, comparability, adequacy and reliability of financial reporting. It is essential to standardize accounting principles and policies. So the account should be completely transparent. It should be comparable. It should be consistent, adequate, and lastly reliable. So to ensure all these things, we need standardized accounting policies. If we do not standardize accounting policy, what will happen? Every business will make their accounts in their own way. So we have innumerable number of accounting principles and policies. In that case, we cannot rely on the financial statements. We cannot compare one financial statement with other financial statements. There will be no consistency. All chaos, confusion will arise if there are no standardized accounting policies and principles. That is the reason why, to bring transparency, consistency and comparability, adequacy and reliability, we need standardized accounting principles and policies. Accounting standard provide framework and standard accounting policies for treatment of transactions and events that the financial statement of different enterprises become comparable. The only thing we want to judge whether the business is good or not. We can know only whether the business is good or not by comparing one business performance with another business performance. So comparison is possible only when both the businesses follow the same accounting principles, same accounting policies. That means how to treat the events and transactions in the books of accounts. There should be some procedure. There should be some policy. So the accounting standards are issued mainly to harmonize the diverse accounting policies so that all the business organizations should follow the same policy and we can be able to compare the performance of one business with another business. Now we are coming to the definition of accounting standard. Accounting standard are written policy document. First point. Accounting standard is not just a piece of paper written something. It's a written policy document issued by the expert accounting body or by the government or by any other regulatory body. See here, this written document, policy document, should be issued by a statutory body. That means expert professional body. Like in India, we have Institute of Chartered Accountants of India. This is a professional accounting body which issues all the accounting standard, which will regulate the accounting profession in India. Like that, in every country they will have a body, a professional accounting body to regulate, to issue this document, policy document, so that this policy document should be implemented by the business organization in the preparation and presentation of financial statements, right? So normally this will be issued by an expert accounting body, or it may be issued by the government, or it may be issued by any regulatory body, covering the aspects of recognition, measurement, presentation and disclosure of accounting transaction and events in the financial statements. Now, this definition is very, very, very important because it contains all the ingredients of accounting standard. First ingredient, it's a written policy document. It's a written policy document which is issued by expert accounting body, just like ICAI, or by the government or by any other regulatory body. And it deals covering the aspect of recognition. Recognition means we have to recognize the transaction and events. Then measurement. After recognizing the transactions and events, we have to measure the events. After measuring the events, presentation in the financial statements. And lastly, the disclosure of all the transactions of the events in the financial statement. Now, AS, accounting standard, deals with the issues of. So here I have taken 4. The accounting standard will deal with 4 issues. The first issue is recognizing the events and transactions in the financial statements. So what are the events and transactions that should be recognized in the financial statements? Either in the profit and loss account or in the balance sheet. Which item should be recognized? That is the first thing. That means accounting standard deals with this. Secondly, measurement of these transactions. Once we have identified which transaction to be reported in the financial statement, the second one is measurement. Measurement is one of the essential aspect of accounting. Measuring those transactions. Third one, presentation of these transactions and events in financial statement in a manner that is meaningful and understandable to the reader. Why the financial statements are prepared? The financial statements are prepared to provide the information to the decision maker. So many stakeholders are there, they have to take the decision on the basis of financial statement. So financial statement should contain true and fair view. The financial statement should be reliable. The financial statement should be understandable. So presentation of all the events and transactions in the financial statements, so that the financial statement should be meaningful and understandable to the readers. Last one is disclosure requirement. The disclosure requirement which should be there to enable the public at large and the stakeholders and potential investors in particular to get an insight into what these financial statements are trying to reflect, and thereby facilitating them to take prudent and informed business decisions. That means, when we give the information in financial statements, it should communicate to the public at large, or specifically to the stakeholders and potential investors. They must know what the company is conveying, what the enterprise is conveying through the financial statements. Through the financial statements. Because by seeing that information, they have to take the informed decision, rational decisions. Right? So these are the issues with accounting standard. First, accounting standard should identify. Secondly, it should measure the transaction. Third, proper way it should be presented in the financial statement. And lastly, disclosure requirement. Right? Now I'm coming to the next aspect called objectives of accounting standard. First I have explaining about introduction, meaning. Now objective. Why these accounting standards are required? The whole idea of accounting standard is centered around the harmonization of accounting policies and practices followed by different business entities so that diversified accounting practices adopted for various aspects of accounting can be standardized. See, every business will make the accounting in their own way. If there are no accounting standards, then what will happen? Different accounting business, different entities will follow different accounting policies. In that case, we cannot be able to compare the performance of one company with another company. So to bring harmonization in the accounting principles, harmonization in the accounting policies, accounting standards are required because we have diversified accounting policies and principles. Accounting standard diverse accounting policies with a view to standardize diverse accounting policies. That means whatever accounting policies are there, it will cut short. If we have hundreds of accounting policies, we cut short down to few accounting policies. In that case, it will be easier to make the accounts. So eliminate the non-comparability of financial statements and thereby improving the reliability of financial statements. The main objective of this accounting standard is to eliminate the non-comparability of financial statements. If different accounting policies are followed, we cannot be able to compare, non-comparability. So the objective of this accounting standard is to eliminate that non-comparability. In that case, it will become comparable. So provide a set of accounting standard policies, valuation norms and disclosure requirement. So the objective of this accounting standard is to provide the standard accounting procedures or policies, valuation procedures or norms and the disclosure requirement. These things, accounting policies are different, valuation techniques are different, disclosure method is different. So to cut short all these things, the accounting standard are issued so that the worth of financial statement should increase. It should become more understandable. It should give the clear picture of the financial transactions. Now, accounting standard reduce the accounting alternatives in the preparation of financial statements. There are different alternatives of making the financial statements, but for accounting standard will cut short and it will say the financial statement should be prepared in so and so format and within the bounds of rationality, thereby ensuring comparability of financial statement of different enterprises. So the objective, the accounting standards are issued so that the accounting policies should get reduced. We can be able to compare the financial statement of different organizations. That is the objective. Now I am coming to the next point called benefits from accounting standards. Many benefits are there. That is the reason why time to time accounting standards will be issued by professional bodies like ICAI. Now, accounting standards seek to describe the accounting principles and valuation technique and the method of applying the accounting principles in the preparation and presentation so that they may give a true and fair view. So finally, these accounting standards seek to describe, it will describe the accounting principles, valuation techniques, presentation and disclosure so that the financial statements should give the true and fair view. And the benefits are the standards reduce to a reasonable extent or eliminate altogether variation in the accounting treatment used in preparation of financial statements. For preparing the financial statement, we have different alternatives. So this accounting standard will eliminate all the different alternatives, make a standard method of recognizing, measuring, presenting and disclosing. That is the main benefit. Now secondly, there are certain areas where important information are not statutorily required to be disclosed, Standards may call for disclosure beyond that required by law. Many areas are there where law will not make it compulsory to disclose, but this accounting standard will suggest the business organization to disclose even those items which are not statutorily required by law. Right? Next, the application of accounting standard will facilitate comparison of financial statements of companies situated in different parts of the world and also different companies in the same country. Nowadays, due to globalization, we have international investors. A person is staying in one country, wants to invest in another country. So they must know the financial statement of different countries. So these accounting standard will harmonize the accounting principles of the world. That means the financial statement is easily understandable to anybody staying anywhere in the world. Similarly, in a particular country also, different companies will follow different accounting policies. So in that case, accounting standard will make them to follow a standard accounting policy. In that case, we can be able to compare the performance of one company with another company within the same country. Right? These are the advantages. Lastly, what are the limitations of accounting standard? Accounting standard will also suffer from some limitations. The limitations are difficulty in making choice between different treatments. Even accounting standard also suggests a different treatment. In that case, it will be difficult for the company to choose which alternative is better. Again, there is a choice in the hands of the enterprises. Alternative solutions to certain accounting problems may each have argument to recommend them. Therefore, choice between different alternative accounting treatment may be difficult. So it will be difficult for the company to choose which alternative is better. That is the one limitation. And the next one limitation is restricted scope. Accounting standard cannot override the statute. First comes the statute, and below statute accounting standards are there. The accounting standard should not overtake the statute. It should not go beyond the law. That means accounting standard should be under the law. It cannot give any statement which is contradictory to the law. Always it is below the law. That means the scope of the accounting standard is restricted. That is below the law. That's it. So in this video, I have explained you about the introduction to accounting standard, what are the objectives of accounting standard, benefits and limitations. In the next video, I'll explain you about the process of issuing accounting standard and then few problems.